silver certainly here could just keep going here. It could be a rocket ship here in the next few months. So, my target on silver was raised in that same fourth quarter letter from $75 to 100. But the other side of the bust, they will be part of the leadership that takes, the market, the indexes may not get back to these highs for decades. The highs we see next year in the equity markets may not be revisited for decades. On the other hand, the metals and the miners, I think, will have a very big move next cycle. So that I'm calling for 20,000 gold by sometime in the early 2030s, 500 silver, and a lot of commodities. I think will do very well because I think post bust, it's going to be a commodity cycle that will lead.
In this compelling market outlook, renowned macro strategist David Hunter lays out a bold forecast for silver, gold, and the broader commodities sector. As we enter what he believes is a historic turning point, according to his analysis, silver may be on the brink of a rocket ship move, potentially accelerating sharply over the next few months. Hunter recently raised his silver price target for the current cycle from $75 to $100, citing powerful momentum, tightening supply, and a high-confidence technical setup. Hunter also warns that while precious metals prepare for explosive upside, the equity markets may be nearing a peak that could take decades to revisit. He believes the highs expected next year could mark the end of a long era for major stock indexes, creating a dramatic shift in market leadership. On the other side of what he calls an inevitable bust, commodities, led by gold, silver, and mining stocks, could dominate the next cycle. His long-term projections are striking: $20,000 gold and $500 silver by the early 2030s, driven by structural shortages, global monetary expansion, and a powerful commodity-driven recovery. If you found this helpful, like, share, and subscribe to The Metal Bar. Turn on the bell so you don't miss any updates, and comment below to share your thoughts on it. Appreciate you for tuning in. Now, listen to the interview.
Yeah, I think gold and particularly silver look excellent here. I am as bullish as I am on equities. I'm more bullish on the metals, or certainly on silver. Silver, to me, is just breaking out. It went to all-time new highs in the last month and consolidated those highs, and now looks like it's ready to run. The miners, same thing. In terms of consolidation, I think that consolidation, there's always a chance here in the next week, 10 days that, if there's something out there that's going to cause the pullback in the equities, it could also have the miners sell off here, or the metals and miners sell off. But that one's not as clear. I think the equity market, even though that setup doesn't have to happen, it's pretty clear it might happen. My GDX target was raised from 75 to 120. My GDXJ, which is Junior Miners ETF, was raised from 100 to 170. My SIL is the large cap silver miners. I raised that from 75 to 150. My junior miners, SILJ, I raised my target from 35 to 60. So you can, and like I said, those are pre-bust targets. I'm calling for a bust later next year, sometime next year. But prior to that, I expect those targets to be reached. So, you look at the numbers on those, do the calculus on those, and you see that there's an awful lot of upside if I'm right. So I think we're in the sweet spot for the miners. Obviously the metal price moves up and the miners make more money, and that's where we're at. And surprisingly, institutions are just beginning to warm up to the precious metals. They may have some gold, they have absolutely no silver, and that's just happening now, where they're starting to notice the performance and say, well, we maybe need to have a little bit of that in there. So whether it be the metals or the miners, the institutions really haven't been big participants, and I think that could be part of the impetus for those big moves. They had huge moves in the first decade of this century. Back particularly between 2009 and 2011, they had big spikes, both both gold and silver miners. And then they went through a long consolidation that lasted several years, started picking up back in maybe 2016, but were frustrating to investors because they'd start to go, particularly the silver miners, and then they'd give it back, and so people kind of got frustrated with the managements of the miners. They tended to, just when things got good, they went out and raised capital, diluted their stock, um, and failed to deliver on things. People had expectations and they wouldn't meet expectations, or would underperform. So it was a long slog, and only really in the last couple of years have they gotten going. The gold miners first, and the silver miners more of late. But there is really so much there to like, and I think it's going to be, and this is unlike the equity market, which I'm calling this a 43-year secular bull market top that we're heading into here in the equity markets. Silver and gold, this is a top prior to the bust. Most everything will get hit in the bust. So they'll get. You could see 40 or 50% hits to even the metals, and more in the miners.
In this market shifting analysis, macro strategist David Hunter outlines why gold, silver, and the mining sector are entering one of the most powerful phases of their long-term cycle. While Hunter remains bullish on equities in the near term, he is even more optimistic about precious metals, especially silver. After breaking out to new all-time highs last month and consolidating those gains, silver now appears positioned for another major surge. The miners are showing the same pattern, with tight consolidation signaling a potential breakout ahead. Hunter notes that short-term volatility is possible, particularly if equity markets pull back in the coming days, which could temporarily weigh on metals and miners. Even so, his targets paint a dramatically bullish picture. GDX raised from 75 to 120, GDXJ from 100 to 170, SIL from 75 to 150, and SILJ from 35 to 60. All before the major bust he expects later next year. A key driver behind the next leg higher may be institutional participation. While some institutions hold gold, almost none hold meaningful silver exposure. As performance becomes impossible to ignore, institutional flows could fuel explosive upside in metals and mining stocks, similar to their massive runs in the 2000s and early 2010s. Though miners frustrated investors for years with dilution and underperformance, Hunter believes the sector has finally turned a corner. With precious metals entering a major pre-bust top and broader equities approaching a 43-year secular peak, metals may offer one of the strongest setups in the entire market. Let's get into the interview.
We're a week away from a Fed meeting, and everybody's assuming the Fed's going to cut. I think that's probably a decent bet right now, but it's always what comes out in terms of Powell's post-cut press conference. And he could disappoint there or talk about being cautious or whatever. So whatever, or it may be speculation leading up to the meeting that causes a sell-off, and then you get good news at the meeting. I'm not really too concerned about what the next week or 10 days looks like. I think we'll get a pullback one way or the other probably, but if we don't, we don't. But I am, once that little backup in rates happens, if it does happen, I'm very bullish bond market. I see maybe in the first quarter, certainly by the second quarter, you could see 3% or below on the 10-year. And if you get that, obviously that will help mortgage rates, and it'll be going into a spring selling season. So you could get one final hurrah in housing, not to new highs for homes themselves, home prices and activity, but for the home builders, they could get a surge in activity and run their stocks up. So I do think home builders will play here. I've been calling for the dollar to fall to 82, and that's still my forecast. So I expect a dollar devaluation or dollar weakness here for the next 6 months, and pretty hefty drop. It's been in a counter trend rally for several months now. For at least a couple months, back towards 100 or over 100, and now it's at 99. And I think we pretty much have finished that counter turn rally. I expect the next stop to head, to see the dollar head towards 90, and ultimately, as I say, 82. So even though I have that forecast, I still have a forecast that after this final run, the market rolls over, the economy rolls over, so that later in the year, whether it's second quarter through the into 2027, or whether it starts a little later than that, I don't know, but I don't think weaker dollars stops that. And again, I remind people, if our dollar's selling off like that, versus the dollar, the euro's going up. I have a target of 130 on the euro. I have a target of 150 on the British pound sterling. I have an expectation that even the yen's going to have a good rally.
In this timely analysis, macro forecaster David Hunter breaks down why the coming days could set the stage for major market shifts across bonds, housing, and global currencies. With the next Federal Reserve meeting just a week away, markets broadly expect a rate cut, but Hunter stresses that the real market reaction will depend on Powell's tone at the post-meeting press conference. Any hint of caution or uncertainty could trigger short-term volatility, but Hunter remains confident that any pullback would be temporary. Beyond the immediate noise, he maintains a strongly bullish outlook on the bond market. He expects the 10-year yield to drop to 3% or even lower by early next year. Such a decline could spark one final surge in housing activity, benefiting homebuilder stocks even if home prices themselves don't revisit previous highs. Hunter also reinforces his long-standing call for a major decline in the US dollar. After months of counter-trend strength, he forecasts a deep drop toward 90 and eventually 82. A weakening dollar, he argues, could fuel substantial rallies in global currencies, including the euro, British pound, and even the yen. If you found this helpful, like, share, and subscribe to The Metal Bar. Turn on the bell so you don't miss any updates, and comment below to share your thoughts on it. Appreciate you for tuning in.